The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
All right, looking good, Billy Ray, feeling good. Let's take a look at what's happening with the DAX. As you can see, we held that bottom so far. That's actually a pretty good sign. Remember that Stan Harley thought that June 19th might be a very, very important low date, and so far that has held. We'll cover a little bit more of that. Today's guest will be Rich Anderson. Tomorrow, try not to miss Dennis Gartman. He's probably one of the more famous people we've had. Well, they're all famous, but he's on CNBC quite a bit, so we'll see what is going on. Anyway, we'll watch this very, very closely, and we'll see whether these things hold or not. But remember, we do have Rich. We're going to talk about the grains, of course, because a lot of things are happening, as you can imagine. And, you know, we'll be watching it very closely. Okay, the next one we want to take a look at is the FTSE. And as you can see here, this is even much better. It's making a much, much higher bottom and has sold off very, very lightly. As a matter of fact, we've had to struggle to take out the lows of May 25th. So that's telling you that the rest of the world is not too shaken up, at least Europe anyway, about what's happening with this potential trade wars. And people have asked me about this, and I really, you know, I don't know anything about these trade wars, and not too many people do either, because they're not very common. You know, we see them occasionally. They're usually short-lived, but, you know, just look at the charts and look what's happened to the grain markets. I mean, we had a $1.70 break in more than that. We had, a $1.70 break in soybeans, for heaven's sakes. That's a huge amount. A farmer that didn't hedge himself with an average farm of 420 acres, you know, he took a hickey of about $40,000. So, well, you know, that's so far, because maybe the crop will come back, but you just never know. Someone's asked a question about there's a potential head and shoulders pattern in the 10-year notes. I want to bring this up here. This is a 4-hour chart. You can go back over the last couple of months and see it. I've marked those in red. This actually does not qualify for a head and shoulders pattern, folks, for two reasons. And I'm just basing this on what Andrew Lowe did in his book, you know, the non-random walk down Wall Street, where they did all kinds of formulas on these things. But the key to a head and shoulders pattern is the right shoulder should be lower than the left shoulder. And as you can see here, the right shoulder is higher. The other thing is the distance between the head and the shoulder and the head should be very, very close. And this isn't even nearly close. So that's two reasons why we would not calculate this as a possible head and shoulders pattern. Now, if you wanted to trade it for head and shoulders pattern, that's, you know, perfectly up to you, but you have to determine what you're going to risk. We made a 50% retracement on this move back, but, you know, who knows? We'll have to wait and see. Since we're talking about that, I wanted to show you, this is just for your information, but take a look here. This is the 30-year Treasury bond, the September, going back to the high that we made back there. Remember, the September rolled over, so that area, that was the June, was around 147. But you'll notice what we're doing now is we're making a 3 drive to a top pattern over the last 7 trading days. And also we're coming up, we're above the 61% retracement before. And if we get up about another point around 144.20, 144.30 to 145, boy, that would really be a beautiful ABCD pattern with a 3 drive to a top setting exactly at the 78% level up at that 45.02 level. There you wouldn't have to risk very much, and that would be an interesting one to take a look at. Now, there's also the possibility that we could be forming a head and shoulders here in this one, and that would mean that we're not going to get above 144.10 in this move, and it would be ready for that most probably by Friday or Monday. That would be most probably where the timing would come in. But that's what we're watching here. in these Treasury bonds and Treasury notes. We don't trade the notes very often because they're like trading molasses. They're very, very slow, which is a good thing sometimes because you really don't always have that possibility of controlling your risk as easy as you would like to be. All right, I wanted to mention something about one of the stocks that is in the news that really needs a little bit of, let's just get it here. Hold on one second. I found a way. Hopefully I found this way anyway. Oh, I thought I did. Maybe I have. Just a second. I think I have. I think I have. I think I have. Hold on. Takes me a second to run through them. This way, if I do it, I'm able to, I did it. Good. Hold on just a second. Only take me a second. That's not bad. Okay, this is Boeing Airlines. You remember last week we were talking about a potential top, a double top in Boeing Airlines. You'll notice that it made that 1.618 expansion of the week's range previously. That came in right at 373, and we've broken, quite a bit, well over 10% in a matter of, well, exactly 10% in a matter of 10 trading days. And where did we stop yesterday? Right at the 61% retracement. So this, if it's any good, it's not going to get much below that. So people that are looking to buy things that are in a good pattern, this is certainly in an uptrend, and you wouldn't have to risk very much at this level. So it's going to be very important to watch whether Boeing can hold this 337 level. And that, just remember, all of these patterns, folks, are based on probabilities. They're never based on certainty. Andrew Lowe wrote another book called The Heretics of Finance, where he interviewed many traders and hedge fund guys that are, very, very successful, and how they view the markets and stuff. And if you'll go through and read that book, the most of the theme of that book is based on the fact that it's about, they have an opinion, but they know their opinion can be wrong, and so they focus on how much money they can lose, not how much money they can make. And I think if you attack your trading in that direction, you would be far, far better than if you didn't. Now, since we're going to talk about the market here for just a second, let's take a look here yesterday at the E-mini S&P. We'll look at it a couple different ways. This is the yesterday we came down and made the 61% retracement of the low on May 31st, and we made the 50% retracement from the low on the 29th of May. So that's an important thing. And the good part is the way that the the S&P came down. If you look at this is just a partial figure. But look how it was making these drives on the way down, folks. These were just absolutely beautiful drives. And of course, we made one more. After we hit that 2781, we came down one more time, to make that final bottom yesterday, and that's when we were at the 2752 level. So that completed that, and now coming back, we're looking at a potential rally here of around 2781 would be the 61% retracement back. And as Basil always says, we have a bifurcated market because the Dow Jones hasn't even made a 382 retracement yet. And speaking of we'll be right back. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look here at this Canadian dollar on a daily basis. As you can see, this is one of the currencies against the U.S. dollar that is, really moved a lot, I guess, related to these tariffs and stuff. But as you can see here, that we have a really big pattern forming up here, not too far away. We've had a pretty good rally again overnight. I wanted to bring that to your attention. What I've done here is just gone to a little shorter, or actually blew up the area so that you could see it a little better and take a look at it. You'll be able to watch this here quite easily. Now, this program that you're looking at here is basically, that's Bryce Gilmore's Wave Trader program. It's from one of our friends across the pond. But as you can see here, we have that 3 drive to a top pattern. You can see X, B, and then the one that's forming up here, which will be around 134.45. And so that'll be an interesting one to watch as we look at it, because you'll have quite a few things to make your calculations on. You have the old highs way back here from several months ago. And then you have the 3 drive recently and the ABCD pattern stretching up. And so you have 3 ratios present at that time. And anytime you have 3 ratios, you have a better probability of success, because it, in fact, is when it fails, you have a lot of probability on the other side too. In fact, that's one of the things that when these 3 drive patterns fail, and boy, they're going higher. That's just the bottom line. So actually, all these patterns, when they fail, usually means they're going to go in the other direction. And some people, that's what they trade. They trade the failures, because there's something there that is different. There's, like they say, there's been a change in, economic thought, whatever that is, and then we'll see whether these things move like that. Look what's happened in the grain markets just recently, folks. My goodness. On the 27th of May, the whole world thought beans were going to go to $14 because of the heat. And now we're, $1.70 under that, and now it's pretty big. Now we'll cover this with Rich Anderson here in about another 10 minutes. But we did have really big volume yesterday and really big ranges. I'll point this out when Rich is on. But there's a really good probability that we made some type of a exhaustion bottom here. Now, where it goes from this level, we'll have to watch very closely, but we'll watch it anyway. Now, Mr. Z has been kind enough to forward on one of the people that he follows has done a seasonal study in gold, and as you can see here, during this, we've been talking about this, but this chart basically verifies this is what's happening. There's a strong seasonal in June and July for the gold to go higher. My game plan is I really like the long side of this, but when we broke down below that 1285 level, which would now be resistance, in my opinion, on the way back, I believe we're heading down to at least 1220 and possibly even $1,200. If we get to that level, that would really be an interesting pattern, because that would be the 61% retracement of the whole move from December of 2016, and that would be right at the 61% retracement, which would be, something really, really big to happen. So we'll watch that. Now, there's also a quiz today. See if you can get it. What is important historically about today? Anybody want to guess it? They win a free prize. Anybody that can guess something that was very, very in the news many, many years ago. And I'll give you a hint. There's a big sign up above it in Los Angeles. If anybody can guess, the time is running out. Time is running out. Judge's ruling, time's out. Today was the day that Bugsy Siegel was assassinated in Beverly Hills, California, June 20th, 1947. You say, how in the heck could you ever remember that? Well, there's a lot of stories behind that one, but he was shot about 25 times with a .30 caliber rifle, and you'll never guess they never did find the perpetrator. But anyway, he was only 41 years old. Anyway, that was the good film Warren Beatty, and that's where he met his wife, Annette Bening. Anyway, it was a really good movie, though. I really do that. Warren's sister is Shirley MacLaine. I've met Shirley MacLaine several times. I've never met Warren Beatty, but Shirley MacLaine would always hang out at the Metaphysical Institute by Manly Hall up there at the top of Mulholland. She would be there, and Linda Evans, the beautiful girl from the Big Valley. Oh my gosh, Tim Conway was there a lot. I mean, there was, Juliet Prowse, and Juliet Prowse happened to be one of my customers at Drexel. So anyway, those were the old days. Who cares about the old days? That's history is a mystery, and we're in the present. So let's move on to the next one we want to look at. Folks, the retracement that we had yesterday in the market was very, very normal. Now, the NASDAQ has already exceeded the 78% level pre-market, and the Russell has gone absolutely wacko. I mean, well, not wacko, but it's still making new highs. It's one of the ones, let's just bring it up here so you can take a look at it, but keeps making new highs. So that means that, hold on here, we'll see, there we go. There we go. Okay, let's take a look. Anyway, you can see we're still up near this area around 169 where the big ABCD is, but it has not topped yet. There's no question about it. I mean, it has. Now, the Dow hasn't even made a 38% retracement of this move that we had down from a week ago Monday, where the big Gartley came in. It's not even making a 382 retracement. And the New York Stock Exchange Index is not even making a 50% retracement as of yet. Now, it's still early, but we still might do that. So it's still these few stocks that are doing it. But some of these stocks, like Caterpillar and Boeing, have gotten hit pretty bad. And now Starbucks is really, well, it's not in the NASDAQ, but you can see what's happened to Starbucks. It's pretty much, lost its luster. People realize, gee, I can go to McDonald's for a nice cup of coffee for $1 as opposed to $2.95 for a cup of coffee at Starbucks. Let me figure that one out. But that's neither here nor there. We'll watch that as we go through and see some of these things. I wanted to show you last night. This is where, because I want to bring this up again, this is the NASDAQ as of last night's close, and we've now exceeded by just a little bit the 78% retracement of the move. We got up to 72.90. Now, you'll see the really nice head and shoulders pattern that was there. The right shoulder is lower than the left shoulder. That's the key that you have to look at. And if you'll notice the ABCD structure to the downside, absolutely spot on, misses it by about 7 points, and then the market rallies 100 points in the NASDAQ. So those are the ones that you want to try to pick out. That right shoulder in the head and shoulders pattern must be lower than the left shoulder. That defines the bearishness. In other words, you have a lower market than you would any other way. So watch that one very closely. We're about a minute away from the break. And when we come back, we're going to be talking grains with our good friend Rich Anderson, and I'll show you a couple of charts that have a lot of interest. If you remember, that corn chart yesterday was really close. We were looking at D's corn around 366, and then just shortly thereafter, the market broke down really quick to 360. And folks, between 360 and 370 was one short covering rally, and we closed at 375. So let's keep in mind that that's what you want to be looking at. So these are a few of the things that we'll be talking about here when Rich comes on. We want to talk about soybeans, of course, and wheat, and we'll be talking about the grains, maybe even some cattle. Okay, 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I hope we have Rich Anderson of Anderson Capital Management on. Rich, are you there? Well, maybe we don't have Rich today. Who knows? He might be busy, folks. So I'll just move on and continue talking here to see what we can do. Anyway, I posted the chart here of the July corn. That's the nearby corn. That's the corn that's already in the bin. And as you can see here, going back a year, that we have completed, actually a year and a half, you can see that we've completed a huge ABCD pattern in July corn down around that 3 340 it hit, and of course it's rallied 15 cents from that level. So, and there was huge volume yesterday, folks. Plus, the open interest in these grains dropped, and when open interest drops and prices drop, that's a bullish sign because the market's moving down. Now we've got Rich on the line. Rich, how you doing?
Good. Sorry about being late, Larry.
No, Rich, we're just happy to have you because I know you got your pans on the stove are all hot. Listen, tell us, what do you see is going on here with this tariffs? Everybody's asking about it, and not many people know much. What's your feeling here, and what are you hearing?
Well, I mean, the thing over the beans is where most of the fight's about. The two biggest exports we have to China are airplanes, Boeing, and soybeans, and they need our beans. They buy 70% of the world's beans are produced between the U.S. and Brazil, and they're buying all that Brazil has to offer, and then they need ours. Mm-hmm. So this hurts their food producers, the guys that are making meal in China, and their hog producers, putting a 25% tariff. It hurts their people too. Mm-hmm. And they need X amount. They need X amount of soybeans, and so they don't have alternative places to originate it. Where the big concern is, in my view, is down the road. Nixon embargoed back the Japanese back in the 70s. Well, the Japanese sent 40,000 people a year down to Brazil to develop the soybean industry. And,
wow.
I mean, and China can, do something equivalent, maybe not to Brazil, maybe to another country, where, but they'll figure it out. I mean, that's what the Japanese did back in the 70s, and that's the long-term negative thing. These guys need to sit down and start negotiating. The one calming voice in the administration is Larry Kudlow, and he's the guy that had the heart attack a week and a half ago, and so he's not involved in a lot of the discussions that would temper some of their extreme posturing.
Mm-hmm. Rich, is there anything like in 1980? Remember when Russia came out and we embargoed them, and the government stepped in and bought grain, didn't they, during that time?
Right. There's talk about things that the government could do, and in fact, we actually in the bills have authorization for funding to do something like that, and that would be a last resort, but that clearly is something they could do. As far as for the corn, if the price of beans stayed hammered for a year and a half, farmers would plant more corn. That put pressure on the price of corn. Mm-hmm. So then what the government could do is they could mandate a 15% ethanol thing to increase the usage of corn. I mean, there's all these little levers to play, but it's very complicated, and I'm not sure that there are any adults, making the decisions right. Kudlow would be my guy, but he's kind of on the sidelines, and it's easy to take stances and posture, but it's quite another thing to actually get something done.
Well, I can certainly understand that, but we have the amount of history that we have with not embargoes, but with trade tariffs is rather small, and you never know what's going to happen with it because these could end overnight, and these markets would be. Aren't we pretty close to a normal supply demand balance in the beans though? I mean, we have a nice crop possibly coming in, but I mean, there's really not super surplus or anything like that at all, is there?
It's fairly tight, and the demand keeps growing. I mean, there's no question about that. But on the flip side, the weather's been darn near perfect. The good to excellent is each week on Monday afternoons they come out with the crop conditions, and the good to excellent is what you're looking at, and it's 73 and 78% for corn and beans. Well, that's about as good as it gets. Now there's always a chance that there'll be a pressure ridge or something that'll develop in 10 days and turn hot. Well, it always gets hot in July. It's just how hot does it get, and what is the diurnal range? Is it hot during the day but cools off at night? That gives the plant relief. Is it hot during the day but doesn't cool off at night? That's when it affects yield. But the weather's been darn near perfect, and it's all about money flow and margin calls. You know, in the old days, you have several days to meet a margin call. These days, man, you got a call. You know, they expect it right now if you're a big trader, and if you're a small trader, they expect it by the end of the day.
Yeah, they certainly do.
World ever
Rich,
since MF Global and VGS went under.
When we first met, the CFT didn't start till 1975, and we'd already knew each other by a few years by then. My gosh, remember there wasn't even any margin. The firms made their own margins. You remember? I mean,
right,
Conti could make their margin. Barry Lynn could make his margin. I mean, you know, then when the CFTC came out in 75, it changed. But they're making it pretty tight now, which is good because it protects the people, and that's really what you want. You don't like to hear these horror stories where we used to hear those where they would deliver a
global, you know.
That's for sure.
Absolutely.
Yeah. Tell us about the cattle market, Rich. What are you seeing here? The hogs have held up extremely well during this embargo time, haven't they?
The July hogs are what, $4 plus over the August.
Wow.
That's a sign of weakness that is occurring. You know, typically you would see your strength into the August time frame, and for them to be $4 under, that I think is an indication of, you know, there's so much protein coming at us, and an indication of weakness. If we haven't taken out, if August hogs haven't taken out their highs by the 4th of July, we probably are looking at seasonal tops there. But, by the way, the rally that we saw in the cattle these last couple of days versus the hogs, I think there were a lot of guys that had, you know, short cattle, long hog spreads on, and then when the news came out about the embargoes, well, you got to blow your hogs, and you got to buy back your cattle, and that's, you notice the cattle had a pretty nice rally the last couple of days, and when the hogs got tanked a little bit, well, that's some big spreaders unwinding their positions too.
Okay. Rich, we have a question about the weather. Are you watching any weather patterns like El Nino or anything that could, because we got the summer solstice coming in tomorrow, and what's your feeling here about what it looks like as far as weather?
Well, they're starting to talk about El Nino coming back, and that has to do with the ocean temperature. Where the major weather concerns right now are in the Black Sea, which is the Russian area for wheat, and in Australia, Queensland, Victoria. I mean, the USDA had the Australian wheat crop at 24 million metric tons, and currently the Australians are thinking it'll be closer to 18 million metric tons because they got 2 more weeks and then planning's done. You know, if you don't have
Hey, Rich, thanks for joining us, buddy. We really appreciate it. We'll have you on again soon, and thanks again.
All right,
Rich Anderson, Anderson Capital Management.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I'm going to talk a little bit about the soybean market because this is good for us for technical reasons, but also for, like Jesse Livermore on reading the tape. But look at the November beans from March through June. June 1st there. Actually, the 6th was the 31st of May. But look at that. 1, 2, 3, 4, 5, 6 times it hit that level of 1060. And once, it had a pretty good break. It broke almost 60 cents when it got down to that, it did break 60 cents down to 10.99 or 9.99, then went back up again. And of course, the weather was extremely hot here. And the point that I would like to make here is the fact that here you have a market that looks like it's ready to break out, and it makes a higher high than it did at 0.1, 2, 3, and 4 by about 3 cents. And 3 cents in beans is $150. And if that's all it can do in the midst of the hottest weather, that particularly for Indiana since 1937, and it couldn't go anywhere and then closes lower, that is not a very bullish sign, folks. That tells you that this market is probably getting ready to go down because there's nobody scared of it up here. The fact that you've been there that many times and can't go charging through, then that's it. If you would have gone above that 1066 level, that's a totally different story because then you've taken out, all that supply that was there. The demand folks would be in control, but that didn't happen. The key parts to look at here that we were watching is, first of all, if you remember, we because of the gap down we had in the corn during that time, we said, hold off. You want to wait until the new moon, which was Tuesday, and of course that lasted about an hour and a half. And of course, that was accentuated by the tariffs and everything. But you'll notice how quickly we went through the 61% retracement in the beans there at $10, through the 78% level when we hit 983. And then after that, it was, heading down. And then yesterday, we were sitting right at that 1.618 expansion there at 908, and then the market really came unglued and dropped another 47 cents. We were down 50 cents in beans yesterday at one time, and we haven't been down 50 cents in beans in a long time. It's been several years. And if you'll notice that big candle on the bottom that looks like it's going to be a hammer, possibly. So now we'll see what the market is going to do as far as a rally. But we should have some pretty strong resistance up around the 970 level would be my guess. That's, believe it or not, that's $1.10 higher than the bottom we made yesterday. Now, I mentioned this before, but I think it bears mentioning again. Yesterday, I checked the open interest in corn, wheat, and beans, also in oil and meal, and the open interest dropped. When prices drop and open interest drops, that's a sign the market is gaining strength. There's less sellers coming into the market. So we'll see if that fulfills here recently, but that's what we're watching here once before. I see that Starbucks is getting hit this morning, down almost 6%. So we'll take a minute. By the way, we need to take a moment of silence, folks. We lost someone very special to us yesterday. General Electric has gone by the wayside. The last original stock of the Dow Jones from 1897, I believe. It was one of the original stocks. It's now history. And believe me, folks, it wasn't Jeff Elmont that caused that problem. The problem was caused by Jack Welch. And the reason why is the most profitable division that General Electric had was their capital division. And that was run by a gentleman who really wanted to expand it. And what happened was he got into an argument with Mr. Welch, and he basically said, I'm going to take a hike and go out on his own. And he did. I don't remember his last name, but his first name was Don. I heard him on CNBC once right after the whole thing was over. But he laid it out, what had happened. I mean, this was a huge, huge cash cow for General Electric, and they lost it. So that's what happened. Anyway, that's neither here nor there. Okay, let's move on and take a look at a couple other things. We've looked at the soybeans. Let's take a quick look here at this December corn that we were talking about yesterday. There we go. Who was just? Oh, yeah, General Electric was founded by Edison and J.P. Morgan. That's correct. But the key was Tesla came in with Westinghouse, I believe, wasn't it? And that's the one that made the big generators and stuff. I've watched a few of these History Channel things, but that's how I remember it. So we'll see. Here's the chart for the corn. You notice that we had that big ABCD pattern up there at that 430. Again, you know, this market went up into new high ground, didn't go anywhere during the hot weather. And then we left the gap. If you look at the gap there at 410, that was the real key, folks, because once we gapped down below those prices, that was with a big wide range. That was telling us that we were going to look at a lot lower prices in the corn. And of course, we got down to that 1.618 expansion at 366 yesterday, and the market broke quickly, 4 cents. But folks, I have not seen it move 4 cents to the upside so fast, except during a drought. I mean, it went so quick you wouldn't believe it. That was basically short covering. We're trading a little above 370 this morning, but there's a possibility here that this was a washout bottom in the corn because of the fact that you had such big volume, drop in open interest, and a really wide range with a tail close hammer type pattern. That's what it looks like to me. Now, that's just my 2 cents worth, so we'll see what's going on with that, but we'll watch it very, very closely. If you'll remember, we had Stan Harley on a few weeks ago, and he thought that the stock market really wouldn't make a major bottom until General Electric made a major bottom. I believe that was his opinion. One of our listeners here at TFNN reminded me of that yesterday. I was not able to contact Stan yesterday to verify that, but the person that told me that is usually pretty good with his information. So we'll have Stan on next week, and we'll see what happens. Tomorrow we have Dennis Gartman at the half-hour break, and then Friday we have one of our very special guests, Bill Meridian, who will be talking to us about the seasonals in gold. He has some really good information on the gold market that I think we want to pay close attention to him. That's Bill Meridian of Cycles Research out of Vienna, Austria. And keep watching Bloomberg and CNBC this weekend, folks, because you might see Bill walking through the lobby there, hobnobbing with his buddies from OPEC. So we'll see if we get to take a quick look at him. Anyway, let's move on to one of the other charts that someone has asked us about. Give me 1 second and I'll bring it up. And that is this Japanese yen. We've had a pretty good break in this dollar yen here yesterday. Hold on 1 second here. Have a little problem. There we go. We got the problem fixed. Here we go. Get it up here. We broke down to that 109 and change level, and now we're hanging in this area. We're still in a downtrend. That means that dollar index is still looking really good. And if you take a look at the euro, if you want to see a dead cat bounce, I'll show you two of them. The first one is going to be the gold, and you'll see that right now we're trading around 1278. Our new low has been 1272, which has been a very, very small move. And then the other one, if I can just find it, and I just had it here, was the euro, and well, I don't have it, but I need to cover Bitcoin. So let's take a look at Bitcoin, because this stock is not looking good, folks. I believe we're heading to 4,000 in Bitcoin. Look at these little tiny rallies after we break. We get these little sideways with basically no action, like $200 or $300 a share, which is nothing. Look back here during December you know, through May, we had some wild swings. We've got nothing happening now. They're losing interest in this puppy. That's exactly what you want to see. $4,000, it's going to look pretty interesting. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I posted that chart of the euro. You can see after the big break we had on Thursday, we've gone nowhere for several days. That's not a bullish sign. It could change at any moment, but it looks like that 116.30 area is going to be some pretty strong resistance. Someone's asked a question about the gold. I believe we have to wait on the gold until the pattern completes down here. I think it's going to be quite a bit lower. I'd really like to see it down around that $1,220 to $1,200 per ounce level. That's $50 from where we are right now. And, you know, we've already broken 40 from the high, so we could easily make that. So let's be patient. We see a seasonal coming in here. Bill Meridian's going to have a really good presentation on Friday about the seasonals that he's looking at, and also discuss his new book on astrology, which I think we'll really enjoy. I've seen it. I've got a copy of it. It's incredible how smart that guy is. It's just really blows me away. Anyway, folks, remember that it's a market of stocks, not a stock market. So a few stocks can make things move, and we would be looking at the Dow Jones, if it can finally make a 382 retracement, if we can get it up there to 24,900 in the Dow E-mini, but we're going to make a new high here, and the NASDAQ looks like very shortly, and yet we're not going to be carrying on with the other markets like the New York Stock Exchange Index and the Dow, and also the S&P 500. The S&P 500 has a pretty strong resistance coming in at that 1281 level, and if it can get to that level, and we're not very far away, we're only 7 points away, but 1281 is a key level to watch because that's a 78% retracement back from the high that we made on the 12th of May. Tomorrow we have the summer solstice, which is always exciting to look at, so we'll be talking about that, and we'll also have Dennis Gartman on our show tomorrow, very famous market letter writer I've known for many, many years, and he'll be on talking to us about gold and silver, the bonds, and the overall view of the stock market. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!